Can we just pretend that everyone comes to a deal in the next 48 hours? What happens to the oil price?
Well, I think the market's already pricing in a deal. And yeah, if we pretend that all of them are coming together, then yes, I think the price action does suggest that, 10, 12 million barrels per day of cuts, or 10, 15 as well, some of them, the numbers being floated. But I don't think there's a lot of upside from current levels. There's a few shorts that are still going to cover. Ultimately, though, once the dust settles, the demand declines are still bigger than the supply shortfall.
So what kind of downside risk then do we see in prices? Like, are we going to 10 in some areas here in the U.S.? Like, what do you see?
I think in terms of the supply declines, we are going to, let's say if it's 10 million barrels per day of cuts, that will be contingent, at least partially, on how much the U.S. Cuts. Now, U.S. is going to obviously face natural declines, and we've already started to see some production shut in, but we haven't seen millions of barrels per day shut in, and that's not going to happen till year end.
Right. So not until the year end. So it also raises the question, which I brought up earlier too, like who can shut down as fast as they can? Like U.S. producers, can they really flip a switch, or is it a lot more complicated versus how Saudi Arabia and Russia can really start paring back production?
Well, that's the thing. But, obviously, you're 100% right. The U.S. can't that quickly. However, I think the difference is the market is going to force producers around the world to do it because it's going to be storage driven. We are going to run out of storage space either by end of this month or middle of next month because the demand declines are so steep. And once you're out of logistically, once you can't move the oil, then there is no other option, but you absolutely have to shut in.
Mm-hmm. So how effective will anything actually be? And is the effectiveness really in the length of the cuts that are decided on?
Well, I think this is supportive for sentiment because it was the demand declines plus the fact that the Saudis and Russians had decided to not support the market. So in that sense, yes, it's effective. But in terms of really sorting the oversupply, it reduces the extent of the oversupply, don't get me wrong, but it potentially doesn't even prevent tank tops. If you think tank tops are by end of this month, the earliest the deal is going to come through, it's going to be early May. So you can't prevent that. We will have to shut in millions of barrels per day of production first before the deal kicks in. So this is much more relevant for the second half of the year. Q2 is a write-off. We are going to need floating storage. We are going to run out of inventory space. But it's about the second half, as and when demand recovers. If these guys also maintain a little bit of discipline, can then the market recover a little bit quicker?